Today, I'd like to talk about the updated International Energy Agency report on oil for October. In this, we look at growth in demand, growth in supply, and where we think the Brent oil price is going. Chart number one starts in the beginning of 2021. And what we can see is the dramatic rise both in demand and supply from the beginning of 2021 to the end of it. In calendar 2021, global oil demand increased from 94.3 million barrels a day in the first quarter to 100.8 million barrels a day in the final quarter. Supply raced to keep up with demand, but never quite got there. Supply rose from 92.6 million barrels a day in the first quarter of 21 to 98.6 million barrels a day in the fourth quarter. World demand exceeded supply in every single quarter. And as a result, stocks fell and prices rose. It was this recovery in demand as the world began to reopen again after the pandemic, which is the condition for the rocketing oil price. And the oil price was rocketing before the first Russian tank rolled into Ukraine in the beginning of 2022. So it was this increase in demand as the world reopened from the pandemic that drove up the oil price, not the war in Ukraine. In 2022, demand fell and supply modestly rose. By the second quarter of 2022, global demand had fallen to 98.4 million barrels a day, and supply had risen very slightly to 98.6. So there was slightly more supply than demand. By the beginning of 2023, global demand had risen to 104 million barrels a day, but it had been flat there for about 3 quarters. And the reason for this flatness in demand was the renewed shutdown in China. By the first quarter of 23, global supply had risen up to 101.9 million barrels a day, and that was 1.5 million barrels a day more than demand. So what that meant was that stocks began to rise and prices fell, and that continued until the middle of 2023. But that period of oversupply has now been followed by a period of tightness. 2 things have happened. And the International Energy Agency October report tells us that there has been buoyant demand growth in China, India, and Brazil. But it tells us that China was 77% of that increase in demand. This has stabilized demand in the third quarter at 102.7 million barrels a day. And the IEA expects this to go sideways in the fourth quarter to 102.6 million barrels a day. At the same time as demand has gone up, supply has gone down. And that's because OPEC plus countries have reduced supply to 101.4 million barrels a day in Q3 and 101.3 million barrels a day in Q4. And that means that the world oil market is short by 1.3 million barrels a day in the third quarter of this year, and 1.3 million barrels a day also short in the fourth quarter of this year. And the result of that is that stocks have fallen, and as stocks fall, prices rise. And because prices rise after a lag of this period of tightness, then what we get is a peak in oil prices in the first half of next year. And what we anticipate is that the oil price should rise in the first quarter of next year to about $114 a barrel for Brent. After that time, we think there will be an increase in supply, or the IEA thinks there will be an increase in supply, and that will bring down the level of the Brent price to about $88 US a barrel in the second half of next year. But right now, what we're looking at is much higher prices for oil as we go into the European winter. So Europeans may find that winter warmth may be a little bit more expensive than they anticipated.